I think if you look underneath, we're also seeing a lot of stocks moving up. They just aren't the leaders in the market. That also is good news for the continued strength. And the Russell 2000 has been outperforming. So that says it's broader than you might think.
Jimmy, what is your response to that same question about the level of concentration at the top of this market and the concentration, frankly, of these stocks in lots of the ETFs and index funds that more and more investors, especially retail investors, own? What happens if they start to melt?
Well, I think it is a concern, but I do agree with Kate. I think there's more positive news about the stock market in general. I think, Tyler, though, what you're pointing to is that I believe that the return to active investing is going to happen, and it's happening right now. And so you can't just passively invest into market cap weighted indexes and rely on these big names. I think stock picking is going to become very important, but I do believe that we have a good underlying economy that's going to continue to drive earnings. That'll be the story really for this quarter.
If you're telling us, though, Jimmy, that technology is going to continue the gains on the broader indices, I mean, all you got to do is buy the S&P 500, right? I mean, the first half of the year, 4 stocks in the S&P 500 contributed, to 84% of the gains, and those 4 stocks were technology stocks. I mean, it seems like the very simple thing to just plow some money into an ETF if everybody in the world is telling me that tech is going to lead the way.
You can, and we're bullish tech too, but I think it's smart to, as these stocks continue to hit new highs, start rebalancing your portfolios if you haven't and take some profits. So I'm not saying get out of tech, and I'm not saying that I'm negative on those names, but rebalancing your portfolio is still smart, whether you're in technology or not.
Kate, are you at all concerned about what happens to the big multinational companies as we look at potential inflation, the stronger dollar, supply constraints? When you're looking at your picks, does that come into play at all?
It does to a certain extent, but I think overall those are mostly short-term concerns. We're seeing supply constraints. Those tend to be short-term. Companies can fix those. The stronger dollar, we also think, was something in the first half. We don't expect it to continue, but it will certainly dampen earnings, even though overall we think the impact of or the earnings outlook is quite good, and that'll support those stocks moving higher. So I would say concerns, but we think the underlying trend is positive based on stronger economic growth, stronger earnings growth, and also a number of specific catalysts that seem to have gotten investors refocused on the positive rather than the negatives of tariff and trade disruptions.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.